All right. Well, why don't we get started here? Thank you all for joining us today. My name is Sean Brown, and I am the CEO of YCharts. And I am joined by the incomparable Sam Russell, no longer with FMG Suite, now with FMG, since they've
You
done
heard it
a
here first. That's breaking news.
breaking news. They've done a great rebranding. And Sam, you're the chief evangelist. What does that mean at FMG?
Yeah, it basically means I get to do a lot of this type of things. Go out there and educate people on what's happening at the intersection of technology, financial services, and the way you communicate with your clients.
Awesome. Well, Sam, not the first time you and I have done a webinar together. But for everybody
Third,
who's
I think it's
joining us,
the third time.
third or fourth even, I can't even remember. Again, I'm in my 50s now. I don't remember a whole lot of stuff. But hey, if anybody has any questions, we would love to keep this interactive and at a minimum take questions at the end, if not throughout. So please do submit them in the Q&A section that I think you guys are all familiar with now that we're all glued to Zoom. But let's kind of dive into it. Just as far as an agenda is concerned, Sam and I wanted to talk to you about a few things. Number one is we want to make the case that it's really important right now for advisors to be communicating during these tricky times. And I want to make sure we make that point first because there are some people that may have different views on that. If we get you past there, we want to talk about creating the right content for communication. And once we do that, we're going to show some examples. There are a whole lot of advisors doing some absolutely phenomenal work, and we thought best to show you what people were doing rather than tell you. And then tying it all together, how are we recommending that you use steps 1, 2, and 3 in order to grow your business during the downturn? We just see this as a tremendous opportunity not to see your AUM drop, although it may drop on a per client basis. It can be growing in aggregate by taking on new customers. Sam, anything else we want to make sure we cover today?
No, I think that's the high level view. Just, it's interesting to me that we need to cover number one, but we'll show you why we're covering it because there is definitely difference of opinions on how much communication is too much. So we're going to get into that. But if you're really here, which a lot of you I know love to see examples of what other people are doing and kind of how you can frame things. Number 3, going into those examples, we'll get to that later. Make sure you stick around for that because I think you'll find so much value in just seeing some really great examples of how to frame the conversation, how to not quote unquote beat a dead horse, sharing the same thing over and over again, just in different ways. So yeah, stay tuned.
So let's start with number 1, the importance of communicating during volatile times. So Sam and I have talked. I talked to Sam and we agreed. I was on a flight several years ago and it got really, really turbulent on the flight.
Never fun.
Never fun. And when you fly a lot like you and I do, it jars your confidence a whole
And it
lot.
makes you sick if you're like me, because I actually get motion.
Oh, you're that person
Yeah.
who sits next to me on the plane and gets motion sick. And I don't know how to help in those situations except just
Turn
to say,
away.
are you okay? Flight attendant, would you mind helping this individual?
Yeah.
But I think the worst experience I've had when there's turbulence is when I am left to my own devices in my own head to imagine what is going on and how much danger I am in. And I've had flights where you heard nothing from the pilot and you sat there white knuckled because the pilot wasn't attuned with what his or her customers needed. And then I've had wonderful experiences going through turbulence where they basically followed these 5 steps. And we'll try to continue this theme.
If you don't hear anything, I don't know about you, but my immediate thought is they're not saying anything because it's really bad, and they're trying to figure out like what steps they need to take to make sure that we're safe.
Yeah.
Like you're not thinking, oh, they just don't have anything to say.
You're envisioning you're envisioning your altitude dropping and you're headed right to the ground and you're thinking, how am I going to tell my loved ones that I love them? The good pilots are the ones who, number 1, start with the basics. They have a good flight plan to begin with. Number 2, when turbulence comes into place, they acknowledge to their clients or to their paying passengers They acknowledge that there's turbulence. Hey, I wanted you to know I'm aware. We've run into a rough spot. It's going to continue for, it's going to continue for a while. And they move to number 3, which is, here's the details of what's going on. We had a low pressure front, or we've seen this or that going on. And they talk to you about what they know. They talk to you about what they're doing to adjust to that. And then number 4, they tell you when you're going to hear from them again, so that you're not left waiting to go, oh, wow, now maybe we are headed towards the ground. They committed to getting back in touch with you in 10 minutes or 15 minutes as soon as they have updated information. And then ultimately land the plane safely. So Sam continues to be a really good analogy for what people are expecting of their advisors, right? Let's have a plan and then talk to me.
100%. And I think, again, just the idea that when we don't have information, we fill in the blank using our own brains and our own knowledge set. And so, people sometimes will think, not saying anything is better because I don't want to alarm people. But, we'll show some other examples throughout this, but, just be thinking about that. Left to their own devices, people tend to think the worst, not the best.
So before we go any further, though, because Sam, I think you and I want to hit the mark with our audience, can we throw up a quick survey, which we'd love if each one of you could answer?
Yeah, this would be really helpful just to get a baseline, because we are going to talk about a couple different areas today. Sean and I want to spend the most time on the things that you're most interested in and what's going to be most useful to you, so we can speed up or slow down certain sections based on what is going to be best for all of you to learn about. So just take a minute and give us your vote.
Yeah, thank you for that. And while people are voting, we'll continue on. And I think in a few slides, we'll try to pull up those results.
Perfect.
In the meantime, I wanted to talk to you for a few slides on a survey that YCharts did a few years ago to individuals who were advised by wealth advisors. And what we learned about communication there, summarized, is your success can be directly impacted by your communication strategy. So let's talk a little bit about the summary findings. And one of the things I did want to offer up to everybody is it was an in-detail survey. We're just going to mention some of the high-level bullets right now. We will include in the follow-up email to this webinar a link to this, and we'll also have it in the show notes for anybody who's interested, or the chat. So a couple quick summary points. You can see here on the left, 54% of people said their advisor contacted them infrequently or very infrequently. Now, we're going to argue this is not a good thing. It was an okay thing in the 11.5-year bull market, where, hey, you sent a quarterly statement out and it was going up and to the right, and the people whose assets you were managing were very happy with that. It's a real different ball game when things get shaky and when the turbulence starts. So 54% of the people said, as a baseline, I'm not hearing very often from my advisor, while also saying on the right, understanding me and giving good customer service and communications extremely important to me. Add to that, you can read the pie charts here, but with more engagement, you actually build more confidence in the financial plan that you set with your client. Two equally good financial plans, one that's paired with effective, persistent communication, is going to be a more loyal and more confident customer than one that is the same financial plan but isn't paired with persistent and effective communication. So more engagement means more confidence. The other thing is more engagement means more retention. Your clients are less likely to be considering other advisors if they are hearing from you regularly. So let's take a pause there and see, Sam, what did our audience say they would like to hear from us about?
Okay. Let's see. I'm not surprised. The examples is always the most. And, look at that, knocking it out of the park. 71% of people just want to see great examples. And Sean, for me, this is the thing that I try to do with all of the marketing education that I provide is just share it through examples. I think there's a lot of philosophical, this is what you should be doing out there, but not enough, this is how you should be doing it. And people learn really well through examples. So we will move through some of the other sections quicker to get to the examples that everybody wants.
Yeah, it sounds like we're dead on with where we're headed though. So
okay,
let's dive into this. Sam, take it away.
Yeah. So, and I'd love to hear from all of you. Shoot us a note and let us know, do you agree with this statement? When stocks go down, communication from your advisor should go up. And I love some of the rebuttals I got here where people said, communication is a delicate balance. If you over communicate, you will start to look like Kevin Bacon at the end of Animal House. But if you under communicate, you're not doing your job. And, other folks saying you should have already had the discussion about the fact that there's going to be hills and valleys when you started working with clients. So when those valleys come, you don't need to start communicating more because they're prepared for it. On the flip side of things, there's people who have argued that when it does get shaky, even if you've prepared people for that, just what behavioral psychology tells us, they're still going to need that little pat on the back. It's just like, even if somebody tells you, hey, when you get sick, you often get a fever and that's completely normal. You go and you get like a vaccine shot, for instance, and they're like, it's completely normal to have a fever after your shot. But then you get that fever and you're like, oh no, am I that 1% of people that's responding really, really, poorly to this shot? I'm going to call my physician and just double check just to make sure. So just that extra reassurance can go a long way. And so what I mean by communication should go up doesn't mean necessarily even that you're personally calling everyone and saying to them, hey, I'm just checking in and making sure you're okay. Because, right, depending on their time horizon, younger investors, younger advisors, they might be in a place where they're prepared for it. They know what to expect over the long run. But maybe those people that are a little bit closer to retirement and they're thinking, okay, my time horizon is not accommodating as well for what's happening with this drop, they might need a little bit more hand-holding. Or maybe you just have more that you're going to post on social media, or you already send a client newsletter every week, but this week you're going to send 2 because all over the news is the fact that we officially enter a bear market. So you send 2 emails, right? There's different things you can do to kind of accommodate this. But I'd love you. What's your take, Sean? What do you think? Yes or no?
No, I fully agree with you. There was somebody who mentioned in the Q&A section, it's human nature to need reassurance. You can be as secure about things and intellectually understand things. That doesn't mean you don't want to hear it verbally too, or just get some more reassurance. Mm-hmm. One of the interesting things we got also, Sam, we got a comment or a question that said, can you define communication? Is it bad to have 50% automated emails, social posts, et cetera, versus physically calling everyone? Like, should we talk about what are we talking about with regards to communication?
Yeah, this is such a good thing. So one of the things I said we would talk about today is, how much is too much and what do we mean by that? So what I suggest from a marketing and client communication perspective for everyone, whether we're in a time of volatility or not, is to have a weekly communication. So you've established that every single week. I like Thursdays because you can kind of wrap up what's happened during the week, but people often check out by Fridays. Thursday mornings across many industries is when you tend to get the highest open rates for emails. So I like Thursday mornings to send it, but have a regular weekly communication where you're helping people contextualize what has happened, what news has broke, what's happened in the markets and the economy. Just giving them some context, maybe sharing links. Hey, here's a great article we read in the Wall Street Journal that talks about the Fed rate hike, and here's what it means. Here's what it means when somebody's saying we're officially in a bear market, and should you be concerned? And then you can, add some additional context to the, specifically your, target audience. So if you're working with mostly younger families, for instance, you can kind of say, because your time horizon is further out, these are things we don't even need to really be focusing on as much because you've got a lot of time to buy back. So every single week, having that marketing email already in place is going to set you up for success really well. And then when things happen like this, You can have certain people that you're calling. Yes. Certain people that you're sending one-off emails to. So you know your own clients better than I do, but having the weekly, what I call marketing email, and your clients are primed, and even your prospects are primed to already get that, really sets you up for success. And, this is just a great recap of not having a good communication plan is really where we start to see people lose faith. You lose referrals, which you may not even know that potentially were on the table, and you're losing those potential customers. I always like to say nobody fires their advisor for communicating with them too much. But a lot of people end up saying, I got to find someone else. I never know where I stand. I can't get in touch with this person. They're not proactively reaching out to me. I want to find somebody that's paying more attention to me and my family. So
Yep.
I think that's a good way to recap it.
Yeah. So, again, if anybody wants to read the more detailed survey, there are 3 big consequences: loss of faith, loss of referrals, and loss of customers. We didn't make this up. It was from a survey. So please take a look at that. Whether it's weekly, bi-weekly, or monthly, I do know there are some of our audience who says that may be too much for me. It really comes down to you have a feel for your clients. Don't make it quarterly is the only time they hear from you.
And one thing I will say, I see a great response from Brianna, who's saying, weekly feels too much. One thing to keep in mind is I'm not suggesting that you create a blog post or a super long email for each of these. For instance, my financial advisor, what he does that I love, he finds like 3 articles that he's read about what's happening every week. He links to them in his weekly newsletter, and then he provides a quick summary of the main points of that message. Because we know that our clients are looking at CNBC and the New York Times and the Washington Post. So they're seeing these headlines and just what they naturally consume. So that weekly email is just helping, again, them contextualize what they might be reading. Because of course, the media likes to sensationalize everything. Mm-hmm. So it doesn't have to be something you create original from scratch. Keep in mind, it can just be you providing context around other publications pieces.
Yeah, let's start diving into that stuff. So let's go back to the pilot analogy. If you are communicating that you have already agreed to, or you have some tactics that will ensure the customer they're not on autopilot, that you do have your eyes and ears on the controls, people love to hear that. Recommunicating with people, we have a plan, this is what we planned for. Just wanted to remind you, if you want to talk about this any further, let's set up some time. That's the kind of messaging, Sam, like you're saying, I got from my advisor was, we planned for this, right? But that doesn't mean you want to talk about it. Here's an invitation. I'm available Thursday. You want to talk about it. I declined because I said, yeah, we do have a plan and I'm comfortable with it. Monitor things, send small articles. Small articles are a small way to say, I'm thinking about you today. It doesn't have to be, are you scared? Are you scared? Are you scared? Are you concerned about the market? It can just be, here's some perspectives on how high housing prices are being impacted. Or you could be telling people, hey, here's a nice article that supports my view as your advisor, that there are some neat buy opportunities out there on some sectors that we otherwise were saying were overpriced. We have buy opportunities. So please do communicate. But if we agree that it's important to communicate, Sam, let's dive in a little bit to what are the right pieces of content to communicate.
Kind of communication. So right out of the bat, like when we're talking about bear markets specifically, or extreme volatility, I like to share things, or encourage you to share things with your clients that really put this time into historical context, especially for this particular market that we're in and what we're facing. There's a lot of people, yes, we definitely had a sharp downturn in 2020, but it went up so fast. It was like a blip on the radar for a lot of people. This time is starting, I think, to feel a little scarier for people who've never experienced it before, especially if they weren't really investing all that much in 2008, or even if you look back to 2008, we didn't all have a phone in our hand, a smartphone, giving us these constant updates. Social media wasn't the same that it is today. It's hard to even really remember it, but we were way less connected than we are today. So using a chart, a visual, to help say something and show the fact that historically, every single bear market has been followed by a bull market. Saying that is one thing, but showing it makes such a difference and really helps people contextualize what it is that we're facing. I think it's much more effective. Another thing, again, using visuals, and I love YCharts for this, but we always hear about timing the market and why you shouldn't time the market. But saying that and then actually practicing it, the behavioral psychology behind it are two different things. So Bank of America put out this great chart about the difficulties of trying to time the market. And they looked at, if you excluded the 10 worst and best days, basically what would happen. And it just really helps, again, contextualize how large of a missed opportunity it is if you're trying to time the market. And so, if you come across a great article with a great chart, you can take that chart and send it out to your clients, screenshot it, copy and paste it into your email. Just make sure you cite the source of where you're getting it from. Use a tool like YCharts to create charts of your own to help contextualize things. If you're using a tool like FMG, where we're writing timely emails for you, you can add in charts to any of those emails. So we're creating the content, but you can add those visuals in if you need to. So, these visuals, again, our brains process imagery thousands and thousands of times faster than text. They're such a great way, again, to help communicate and helping them remember why they hired you. I loved this chart here, which it was from actually a study done by a group of researchers from a university, where they asked people in a hypothetical situation, okay, how would you change your allocation if the S&P 500 fell between 10 and 20%? And you can see the answers here for investors, advisors, or institutions. Investors had very, very different reactions versus the advisor or the institution. And again, it just goes to show that there's a reason that you hire a financial advisor. Yes, it's for their expertise, but part of it really comes down to that behavioral coaching and having them help you stay accountable to that goal and that plan and help you not make these rash decisions. So all of these charts really help do that. And then again, another strategy I really love in times like this is to remind people of the, cognitive biases that they hold. This is sort of a humorous, funny way to do that with this chart, but it can feel like we're on a roller coaster. It is a roller coaster of emotions to be an investor in a market like this. And more people are invested and have their retirements tied up in the stock market now. And we know more about the stock market as an average consumer than ever before because of the way, our country handles retirement, and people have 401ks and not just pensions and things like that. So again, a chart like this can really, really help people understand what they're feeling and put it into context. Gives you something new to say about what's going on, rather than just constantly saying, we need to hold on to the same plan. We planned for this. You can only say the same thing so many times. These kinds of charts can really help go a long way in reframing the message.
Yeah, and something like this reminds people that they're human and that we're all thinking the same way too, right? Sometimes you wonder, wow, am I being overly, am I not worried enough, or do I have my head in the sand? Something like this is an interesting and humorous picture that helps you see we all fall into these cognitive biases, and if we identify them, it's going to help us make sure we don't act irrationally. Like your last this slide says, don't act irrationally. How about this slide though, Sam? Because I love this.
Yeah. So when we talk about cognitive biases, one of the ones that I think is so relevant for all of you is anchor points. So what behavioral psychology teaches us, it's one of the things, when you go to a website and they show you, like, we have 3 subscription plans. We have this one for $99, this one for $150, and this one for $250, right? It's helping you anchor where the value is. And you can do this with your own, clients. So if your clients are looking at the market and the media right now, all they're hearing is, we're in a bear market, we're down 23%, now today we're down 24%, but 24% from what, right? So helping them understand what their own anchor point is, and the fact that they didn't buy in probably at the highest of the high or the lowest of the low. So, using these charts from YCharts that Sean put together here, you can see if you showed them on the left, the same exact market, but going back to the low of 2020, look at how that chart looks versus if you start from the beginning of this year, right? Such a difference based on what we're anchoring to. And so understanding these anchor points is incredibly important. I hear from a lot of people who they just don't understand that just because the market is down 20-some% doesn't mean their individual portfolio is down 20-some%, right? Mm-hmm. So these sort of cognitive biases in behavioral psychology can be really, really impactful to help explain to, clients, whether you're communicating via an email or you write a social media post about it. That a social media post with something like this would be so impactful for picking up new clients who maybe, again, aren't hearing as much from their advisor and they're thinking, wow, I never thought of it that way. That's a great way to frame the conversation.
Yeah, I agree with you, Sam. And these charts, we're getting some questions in the Q&A. I mean, these charts took 15 to 20 seconds to create. Like, we all have a little bit of time to create a couple of charts or a quick reassuring message and blast it out, or send it individually to a handful of clients that are particularly concerned about things or that need things reframed a little bit.
Yeah.
The point you just brought up, though, I wanted to stress here is, let's not forget that now is a great time for buy opportunities, right? So this may be the time where, again, you had a client who said, I really want to get into the FANG stocks, but they seem too overpriced after the 2020 timeline up until 5 or 6 months ago. This is a great time to be saying, hey, let's look at the S&P 500. Let's break the S&P 500 down into the names that have been the hardest hit. You can see here, if you're looking closely, this shows that Disney is down 39%. Well, maybe you have some clients who are particularly passionate and we're waiting for an opportunity with Disney. Easy opportunity if you use a platform like ours or others to then go dive into Disney and show the fundamentals of Disney. You'd be able to show comparative on how their PE ratio compares to what it used to be, compares to the overall S&P. And it just is a neat opportunity for you to take a look at the notes in your CRM and say, wow, I can be reaching out and actually, when I'm rebalancing or encouraging my client to give me more assets in order to take advantage of some wonderful buy opportunities that are going on right now.
I love this so much. And, we've gotten some questions about, using FMG and YCharts together. So with any of the customers out there that are using FMG or 20/10, and I've put both of them up because right now you do log into two separate platforms depending on, which tool you're using. But in both cases, for instance, with our company with FMG and 20/10, as news breaks, we add timely content weekly. So the minute that we entered an official bear market, our team was on it to create something you could send to your clients. The Fed raises interest rates, we have something for you to share. If you want to contextualize it even further or add a visual and you are a YCharts user, you can create your charts and then just go into that email and click to edit it and then upload, that chart in. Somebody asked about integrating the two products. That's a great idea, Sean. I think we need to talk more about that offline of how we can do that for everybody who's listening in. But right now it really is as easy as saving the image and uploading it in. But the main point of this slide here is just to tell you, like, we are on it. So if you are looking for help with, getting that communication out there in a timely manner with things moving so fast right now, definitely check us out if you're not working with us already. And if you are working with us and you're wondering, how can I get more value? Let me know. My email's at the end of this. It's just srussell@fmgsuite.com. And I'm happy to share, how to go into your account and get more out of it.
Mm-hmm. So as you were mentioning some stuff that you can do on FMG, just a quick plug for some things you can use YCharts for. First of all, our whole value proposition is to try to make the complex easy and the easy quick. And so we know a lot of times you may be looking, maybe you're rebalancing, maybe you're just addressing a client's needs. We have a bunch of pre-built templates that will help you quickly find, with a couple clicks, the best performing taxable bond funds. Or very quickly configure a custom email report that you want to send to a handful of customers or to a single customer that says, hey, I know during this particular time, Mr. and Mrs. Jones would like to get a report that is automated. Back to the question earlier, automated. It's queued up. It goes out every week. You spend 5 minutes configuring that report for your client, and you save it and say, how often do you want to send it? It goes out on that cadence to your customers with no hands and no effort on your part after that initial configuration. And guess what? You've touched your customer. You've been that good pilot who reminded them that you're thinking of them and given them exactly the information they requested on a timely basis, but in a very automated way.
All right, so let's get to the part everybody's most excited about, which are the great examples.
Here we go.
So again, I think we all know this, but we're showing examples from a multiple of channels here, blogs, emails, social media. The main takeaway is, however you are already communicating, you can curate these examples for your preferred mode of communication. And then I know all of you are going to ask me, well, what's most important? Should I be on Twitter? Should I be on LinkedIn? Should I have a blog? Go where your audience is. So if you're mostly working with people who are spending their time on Facebook and in their inboxes, then that's where your message should be. Again, it's going to depend on your own audience, but I'm going to show you examples for all. So here's a great example of an email, again, where this advisor with Monument Wealth Management, he took a chart that he created in YCharts, and then he added it into an email he was sending to his clients about, what's happening right now, and putting some context around it. So I love that his message about this will pass, markets recover, control what you can control and ignore what you can't control, because you can't control what you can't control. It's just a great message and a great chart to go with it. And again, those visuals really, really make a big difference when you're sending an email to help, people get the takeaway of your message really, really quickly.
Hey, Sam, a quick one. We're getting a lot of questions about compliance.
Yep.
Which is a one you and I are super familiar with. And the question is basically, hey, can we do anything and everything? Is that compliant, or does everything we're seeing, is that compliant? Do you want to take a stab at that? And then I'll go second.
Absolutely. So in terms of FMG and 20/10, if you are working with us, whenever we put something into the library for you to use, it has, there's a couple different things. You can either use it as is, and if your compliance team is also baked into our software, which almost most large RIAs and every BD, it feels like, is on there, most of them, then it is usually, if you use it as is, it's good to go and it's been approved. If you want to make edits to it though, let's say you want to add in a chart from YCharts, you add your chart in and then you click resubmit to compliance. It will go to your compliance team, and then they'll reapprove it before it can be go live, because you've edited it in some way. So our pieces are typically pre-approved, but if you make edits, then you need to, have them be resubmitted. In terms of using a chart, so like we've put charts in here from Bank of America, from different sources, it would be the same process. You would add that in and then send it off to your compliance. So we have compliance baked into our platform, so it's very easy for you to submit it for them to approve it.
Yeah, and the answer from our end is either you can leverage the tools like Sam's describing with FMG, or we have a number of compliance approved or regulatory approved reports, and we also are happy to provide guidance on what we are seeing from one advisor to another. But our big disclaimer is always, it's always best to check with whomever or whichever group you have that is compliance minded, to make sure you're staying on the right side of the specific, rules that you face.
Yeah. Good point. Okay, so here's an example from Twitter, and I just saw a question come in. Based on your experience, do you feel Twitter is a useful communication tool for advisors overall? I know you said it's based on your audience. So this Thomas Popelman is an advisor that I love the Twitter threads that he does. So a thread, if you're not on Twitter, is basically, rather than send people to your blog or have them click on a link to go get information, you create a series of tweets that are all connected by a thread, and people don't have to leave Twitter to get the crux of what you're talking about. And because of the way these social media algorithms work, Twitter likes people to stay on Twitter. They don't want them clicking off to go read your blog. So they often will show more people a thread than they will a tweet that just links off to another page. So a lot of times people will use threads as a way to build their audience. So here's just an example of a thread that Thomas did on what's happening with, the current volatility that performed well. And to answer that question about, is Twitter a good place for advisors? If you're trying to get booked to speak at more conferences, or you would love to connect with journalists in the media so that you can be featured in CNBC and put that on your website, right? Featured in CNBC. Twitter is a fantastic place to do that. If you're trying to connect with business owners or people who are in technology, Twitter is a great place to do that. If you're just trying to connect with, people who are already retired or pre-retiring, not as necessarily strong of a place. So again, it's going to depend on your audience, but I really, really suggest it for a place if you're trying to get more media placements, more quotes, so that you can kind of prove that, you're a thought leader, or put that as featured in on your website. It's a great place to spend your time. Okay, here's a blog post that I think does a great job. And this one also includes a chart from YCharts. But again, this one has the chart at the top and just contextualizing, again, what they're talking about. So again, I cannot stress the importance of having a good visual enough, whether you're using YCharts or you find a visual online and you want to give credit to it. But, creating a blog post first, and then you can send people to it from social media or from your email. I always like to do that, because then you're also going to get all those keywords on your blog that are going to help your website get shown to more people from an SEO perspective. And then you can use it in multiple ways. You can use it in an email, you can use it in a social post. So I highly recommend, doing a blog post. If you're going to create some content anyways, turn it into a blog post as well.
Yeah.
And then for podcasts, I know some people, already have a podcast. Obviously, this is a great thing you can talk about. It's easy to quickly, create a podcast on a subject. But if you don't have your own podcast, but you have, some great value and information that you can share, reaching out to other people that may have one. So maybe there's an estate planner that has a podcast, or there's your local community group has a podcast, and you can reach out to them and just say, hey, I know a lot of people in our community have questions right now about what's going on. Or maybe there's a local group of retirees that come together, whether it's a podcast, whether it's a, group meeting. If you kind of go out there and pitch yourself as the expert, hey, I have some great thoughts I can share on the topic. If you would like to have me as a guest, that can be a great way to get your information out to new people as well.
Sam, I think that's such a huge point that, it can be a little daunting if you don't currently have a podcast, but don't wait for somebody to call you to be on their podcast. Reach out to them and suggest an idea. A lot of people who have podcasts are actually really looking for great content ideas or great guests. And that's an absolutely awesome thing to say, hey, reach out. Here's why it's good for the community or a specific demographic. Here's why it's good for you, a podcast hoster. And obviously it's good for me.
Good tip. And so I know so many of you are wondering, like, how do I frame this on social media? And many of you are using LinkedIn. So here's two different examples from LinkedIn that I thought were really, really great. The one on the left talks about one of those cognitive biases. So here, it's just a great example. And so many of you have asked me too, like, should we be posting this from our personal pages or company pages? So you can see Branding Wealth Management was the company and they did the post, but then Johnson, who's one of the advisors at Branding, reshared that post to his network. So it says, why does losing money in the market hurt so badly? Because of the behavioral side of finance plays a big important role. And then, they actually link to what it is. They tag a few people. They've got some hashtags that they're using. This is a great example of how to go about, talking about these things in a way that's really interesting. And I love the visual that goes with it, of somebody in sports, because it really helps capture your attention. It's not boring. Hopefully it's going to stop the scroll. The one on the right, I love as well. In times like these, a lot of people will try to equate being in the stock market to gambling. And so this Caliber Wealth Management, they talk about why that's not the case. And looking at the time horizon, your odds of losing money versus the odds of making money, and how the more time that you're invested for, which we all know being invested in the long run is what the important thing to remember is, but really showing that in a chart and how different it is from gambling. So 2 great examples of the types of things you can share on social media you don't need to send people, necessarily to a blog in order to get your point across. Just using a strong visual in and of itself can be the post.
Yep.
And then one more example, I really am a huge proponent for what I call repurposing content. So a lot of you are thinking, I'm communicating with my clients right now, but how is this a time to get new clients? I'm really just focusing on helping the clients I do have. Well, here's a great example from Wayne here, where he had a video that he created to quickly check in, touch base with his current clients. And then a couple days later, he took that same video, he posted it to social media and said, this is the message we sent out to our clients this week. And he summarized a few key points. That's also a crucial tip. If you are creating video, don't just repost the video. See how here he has a couple points from the video that he wants to highlight. You want people to be able to get the gist of your video, whether they watch the whole thing or not. The other thing is you can see he's got captions on the video. So if somebody is just scrolling on social media with the sound turned off, which is what most of us do, they can watch the video and get the points of the video across without actually having to turn the volume on. But this is a great way of taking something you're already doing with your current clients and repurposing it. I think when it comes, I don't know about you, Sean, when it comes to content marketing, I find a lot of people get overwhelmed with the idea of creating content. So I really challenge you to reframe it and just think about it as communicating with clients, because content marketing is really just communication. It's taking any communications that you would normally have and then repurposing them so that, they're available and accessible for more than just your current clients. That's really what content marketing is.
Yep. And I love the point you made about create once, leverage multiple different channels, or even the same channel multiple different times if you've got evergreen content. That's awesome. The thing I personally struggle with, Sam, is that we look at this picture of Wayne Wagner. That first image, when it goes up with me, it's usually me in that mid-sentence where I'm like this. So Wayne has got that art down, and I think I need to learn this a little bit better. But Sam, so listen, we have said communicate or else. We have shown some things you can communicate, some great examples of communication. Let's try to wrap this all together into how are you actually going to grow your business in this downturn by recognizing that communication is important, seeing some examples, seeing what others are doing. I hope everybody on this webinar has seen Jerry Maguire.
Let us know if you haven't.
if you haven't, you're probably a lot younger than I am, like a lot of my colleagues who said, what is Jerry Maguire? But for me, this was a formative movie. And you guys will probably remember that last scene of Jerry Maguire where Jerry's one client got an absolutely wonderful contract. And they had an enormous hug, very emotional scene where it was just all about having an amazing client relationship. And at the same time, the picture on the right, this character on the left of the right picture, I think his name was Bob Sugar or something like that. He was a slimy agent and he had no real relationship. And for him, it was all about the money and it was very transaction oriented. And his client looks over at this hugging scene and says, why can't we have a relationship like that? And Bob Shug gives him an awkward hug, and it's crystal clear he has absolutely no EQ, and he does not have a client relationship that's built to last. So the point of this slide is, if you do right by your customers, good things happen. And good things happen when they're at a dinner party and they share how much they love working with you and how much you've helped them through this stage. And it helps, them grow the book of the business. And you can take two approaches to doing right by your clients and seeing what happens. Number one is you can take a passive approach, which is just let the dinner parties happen. let the sidelines of the sports field conversations happen. Potentially you've got a post and you do a little paid amplification, and then you say a hearty thank you to anybody who actually referred some business your way. That's the passive approach. Nothing wrong with it, except it leaves you in a position of just waiting and hoping. A more active approach could be creating some client testimonials, requesting people to repost what you've posted, or just saying, hey, I know you're really pleased with my service or my firm's services. Is there anybody in your network that you think is struggling right now and maybe not as happy with their advisor that I should get in a discussion with? So the point here being, there are a lot of advised individuals right now who are not happy with the communication or the services that you're getting. You can wait for them to contact you by taking a passive approach and hoping the Jerry Maguire moment plays out, or you can do some things to stimulate it. Either way, there are advised clients who are out there that are looking to switch right now.
Good point. Really good point. So again, how do we, that's, focusing on the clients that you do have and making that relationship one that, they're so happy with that they want to even talk to other people. But what about the people that, you're not in front of already? Again, repurposing the client communications that you have, like we saw with that video with Wayne, into things that people beyond your current client portfolio can see is a really, really great strategy. And, there's lots of ways you can repurpose. You can have a blog post that gets approved by compliance, and then you break it up into small little snippets and post it on social media. You can take an email that you write and talk it out on video and repurpose it into a video. All of those types of things are great. But when you're creating this content right now, where people are scared and they're fearful, at the end, having something that's a simple CTA, a call to action, is a really, really powerful way to move the needle. So what I mean by that is you're talking to people, you're reminding them why this is normal, reminding them that great financial plans take this volatility into account and plan for it, and not just plan for it, but expect it to happen. So you're being that reassuring voice. And then at the end, you say something like, if you're just not sure if your portfolio is balanced, and you're just not sure if you're really taking advantage of things like tax loss harvesting right now, or your current advisor you're working with isn't bringing these types of strategies up to you, our office would love to talk with you. Here's how to get in touch with us, right? And you can kind of mention a couple strategies that maybe they haven't talked with their advisor about. And so just by virtue of hearing you mention them, they're going to think, well, I don't know if my advisor is doing that. I would love to talk with this person about it. So it's a great way to get in front of those folks who may not already be working with you.
Mm-hmm.
And if you're watching all of this and you're feeling like this is great and I know I need to be doing this, but can someone just do it for me? I get that question all of the time. We actually launched at FMG just a couple months ago, an official, what we call Do It For Me program. So you get a calendar like this every month telling you this is all of what we're going to put out on your behalf. These are the emails we're going to send. These are the social posts that are going to go out. And then you have a person from our team who executes it on your behalf. So we plan a month out. It all goes through compliance workflow. Compliance approves it. We're good to go. And then if things happen, so, when we officially went into a bear market, 1 hour later, I had typed up an email. I sent it off and we got it approved by compliance so people in the program could send it out. So if you're interested in a program like this, definitely get in touch. I put my email right there. I'm happy to talk more about it. But I hear from so many advisors that are like, we love your material, but could you just do it for me? Because it's time consuming. That's why we created this program. So I'd be happy to chat with you about it.
That's smart.
And just to recap, we know that communication is key. Nobody is feeling like, oh my gosh, my advisor just is communicating with me too much and reassuring me too much, so I'm going to look for somebody else. It's the opposite. When we don't have enough information, our brains, fearful of the what ifs, try to fill in the blanks. And often it's not with better information. So sharing your expertise and knowledge through, content and different communications is really going to help you both maintain your current relationships and grow new ones.
So here's a couple quick things. I know there were some questions about free trials and how to get in touch with the respective businesses and how we work together. Come talk to us. We would love to talk to you, offer free trials, and would just love to engage with you. For now, though, Sam, maybe we can take a few minutes of questions in the Q&A section. I do see a question that maybe I would.
Real quick, sorry, before we do that, I saw a bunch of people asking about the charts and if they'll get these charts so they can send to clients. Yes, we're going to send everybody the slide deck and the replay. If you want to connect with me and Sean on LinkedIn or Twitter, I'm Samantha C. Russell on LinkedIn. I have shared a lot of these charts recently, right on LinkedIn. So you could go to my LinkedIn and copy and paste the charts right from my posts if you don't want to wait, but we will be emailing them. But I'm happy to connect with you all there as well.
Yeah, and same thing with me. I'm Sean_YCharts, and I'm constantly posting charts that you are welcome to grab. Always appreciate if you offer attribution, but always posting charts and putting it in the public domain. So hope it's helpful.
Okay, so back
Sam,
to the question.
one of the questions I saw is, and we heard it earlier, does communicating as often as weekly make clients myopic? We don't want them watching the market. The best client is the one who doesn't know what's happening, except that they're fine and have nothing to fear.
And that's where I think establishing a communication strategy long before the volatility even happens is always best if you can, because if you're already emailing them weekly, they're going to be primed to get those communications weekly ahead of time. So it's not going to feel out of the blue. And again, back to the point I mentioned before, it doesn't need to be, you writing a manifesto every week. It can just be, here's some headlines of what's going on in the news and helping contextualize them. I think that strategy works so well. I agree. You don't want your clients watching the markets and, hanging on to every single thing that's happening. But right now, you cannot open a newspaper without hearing about inflation, oil prices, and bear markets. Like, it doesn't, whether or not you want them to watch it, they're hearing little snippets of it. So
yeah, and Sam, I also want to go back to our analogy of the pilot. Like, I know intellectually my plane is not going to go down. I know that. I've been trained to understand that intellectually, and I know the probability. However, communication is still important. And if we've done anything here, I hope we've proven to you, whether it's a weekly or biweekly or once a month, that's up to you to decide. I hope we've at least shown you that not communicating with your customers, even with the best financial plan in the world, that is putting your book of business at risk.
Great point. Really great point. Somebody's asking if we have a questionnaire template that we could share when a client first comes on about, what's their communication preference or how often they want to be communicated with or meet with, how satisfied they are. I don't know if you do, Sean, but I've seen other people say that when somebody does join, they ask them for that. I think keeping in mind that what people say they want, if they became a client 4 or 5 years ago when everything was just going up and to the right versus what they're going to expect now are two very different things. So you also need to take that with a grain of salt.
Maybe one more for you, Sam. Does FMG currently have Canadian content?
Oh, good question. So on 20/10's platform, we do. On FMGs, we don't have like a specific label that just says Canadian, that hopefully will be coming soon, but on the 20/10 platform, we do. There are a lot of pieces though that are, we have a lot of Canadian advisors using it that you can use because they're applicable to everyone. But right now, in terms of just like talking about the markets, it is US market based.
Awesome. Well, Sam, let me try to wrap this up. First of all, we will be emailing out a deck to all registrants so that you can have this in front of you, and hopefully you didn't have to take too many notes. Sam, I want to thank you. It is always so helpful to understand what to communicate, how often to communicate, and why to communicate. And I always learn stuff from you when we have these discussions and offline. But thanks all of the attendees. We are here to help if in any way we can help. If nothing else, hopefully we've given you a few good nuggets to consider as you consider your client relationships during these volatile times. Thank you very much for joining us.
Thank you, everyone.